When it comes to real estate investing, one of the biggest hurdles for newcomers is the initial capital required to purchase a property. Many people assume that buying rental properties is only possible for those with significant financial resources, but that's not true. In fact, there are several strategies that can help you purchase your first rental property with no money down. The idea of getting into real estate without putting your own money at risk might sound too good to be true, but it's possible with the right knowledge and approach. In this video, we're going to break down the key strategies that can help you buy rental properties with no money down, including how to find deals, use creative financing methods, and partner with others. Whether you're a first-time investor or just looking to expand your portfolio, this guide will help you take the first step in your real estate journey. So, if you're ready to learn how to start investing in real estate with little or no money out of pocket, keep watching. 1. Understand the basics of no money down deals. The first step in buying a rental property with no money down is understanding the basics of how these deals work. No money down doesn't mean you're getting the property for free. It simply means you're using other people's money or creative financing strategies to fund the deal. There are different ways to structure these deals, but the key is finding a method that works for you and your situation. Common strategies include using seller financing, finding private lenders, or partnering with investors who have the funds but not the time or interest in managing properties. You should also familiarize yourself with terms like equity, collateral, and loan-to-value ratio, as these are essential when negotiating no money down deals. The more you understand these basics, the more likely you are to identify opportunities and move forward confidently. 2. Seller financing. A game changer. One of the most popular ways to buy a rental property with no money down is through seller financing. This occurs when the property seller acts as the lender, and you make monthly payments directly to them instead of a bank or mortgage company. Seller financing eliminates the need for a traditional down payment and can offer more flexible terms. In this arrangement, the seller is more likely to be willing to negotiate on price, interest rate, and repayment schedule. It's a win-win for both parties, especially if the seller wants to unload the property quickly or avoid dealing with a bank. However, seller financing is not always easy to find. You'll need to network and seek out motivated sellers who are open to creative financing options. While it's not common, when you find these deals, they can be incredibly rewarding. 3. Use a lease option to control property. A lease option is another strategy for buying a property with little or no money down. With a lease option, you lease a property with the right to purchase it later, typically at a predetermined price. This allows you to control the property, collect rental income, and lock in a purchase price, all while paying very little upfront. Lease options can be a great way to get into the rental property market if you're short on funds, as the initial deposit is typically smaller than a traditional down payment. While you may still need to negotiate terms, a lease option offers flexibility and time to build up credit or save for a future down payment. It also provides you the chance to test the property as a rental before committing to the purchase, giving you the opportunity to evaluate its income potential. 4. Look for properties with built-in equity. To buy a rental property with no money down, it's important to look for properties that have built-in equity. This means that the property is worth more than the seller is asking, or it has significant upside potential after making repairs or renovations. Finding properties below market value gives you the ability to secure financing or strike creative deals where you don't need to put up your own money. You may be able to use the equity in the property to finance the deal, either through a home equity loan, a private lender, or even by negotiating for the seller to carry part of the financing. The more equity the property has, the better positioned you'll be to avoid upfront costs and still walk away with a profitable investment. 5. Leverage private and hard money lenders. If you're looking to buy a rental property with no money down, private money lenders and hard money lenders can be a great resource. These lenders are typically individuals or companies who lend money based on the property's value rather than your credit score. Private money lenders might be friends, family, or acquaintances who have the capital to invest but prefer a higher return than traditional banks offer. Hard money lenders, on the other hand, are professional lenders who provide short-term loans with higher interest rates. While these loans are often more expensive than traditional financing, they can be a great option if you're looking to get into a deal with little money down. Be aware that hard money lenders typically require you to have some skin in the game, but they might fund most of the deal. 6. Partner with investors who have capital. Partnering with other investors who have the capital but lack the time or expertise can be a great way to purchase rental properties with no money down. This strategy is known as joint ventures or partnerships. In this arrangement, you bring your knowledge, experience, or time to the table, while your partner provides the funding for the property. Partnerships allow you to leverage the capital of others, so you can start building your portfolio without needing to come up with a down payment. It's important to structure the deal properly, making sure both parties are clear on roles, responsibilities, and profit-sharing arrangements. Having a solid partnership agreement in place will ensure that you can scale your real estate business with minimal upfront costs. 7. Use a home equity line of credit, HELOC. If you already own a property, you may be able to tap into your home equity by using a home equity line of credit, HELOC. A HELOC allows you to borrow against the value of your home and use the funds for other investments, including buying rental properties. This strategy works well if you've built up significant equity in your primary residence. With a HELOC, you can access the money you need for a down payment or even the entire purchase price, depending on the deal structure. Keep in mind that this is a form of debt, and you'll need to repay it, but it's a viable option for experienced investors looking to leverage existing assets. As with any form of borrowing, make sure you fully understand the terms and how it will impact your cash flow. 8. Find motivated sellers who need quick cash. Motivated sellers are often the key to buying rental properties with no money down. These are individuals who are eager to sell their property quickly, often due to financial distress, divorce, or other personal circumstances. Motivated sellers are often willing to negotiate on price, terms, and financing, which can make it easier to structure deals with little or no money down. To find motivated sellers, you can look for distressed properties, use online real estate platforms, or even target off-market properties by sending direct mail campaigns. When negotiating with a motivated seller, be transparent about your intent and the benefits of working with you. Sometimes, they're willing to take a lower price or offer favorable financing to get the deal done quickly. Buying your first rental property with no money down is not only possible, but it can also be one of the most effective ways to start building your real estate portfolio. By utilizing creative financing strategies like seller financing, lease options, and partnering with other investors, you can break down the barriers to entry and start generating rental income sooner than you think. The key is to be patient, persistent, and proactive in your search for deals. With the right knowledge, resources, and network, you can leverage other people's money and assets to secure profitable properties without putting your own funds at risk. If you found this video valuable, be sure to like and subscribe for more real estate tips and strategies. Remember, real estate is a marathon, not a sprint, so focus on long-term growth, stay strategic, and keep learning. Thanks for watching, and best of luck with your first rental property.